Hello, everyone, and welcome into crushthestreet.com. Here we are in 2019, very excited to be doing this interview today with Eric Hadik. We're going to talk about precious metals and stocks and, really everything that's going on right now that is causing this rise in price in precious metals. And are we in a bear market, a correction in stocks, why these things are happening? Eric has a 30-year-long history as an analyst and as a trader. His website is insidetrack.com, inside with two I's in the middle. We'll have the link in the description to be clear. But he's someone who's got a lot of insight on the markets, and he does a lot of cycle work. He's got another website. I'm sure he can mention that as well. But, we're going to be talking about stocks and gold today here in the start of 2019. And if you want my opinion and my research on where we are right now and what's going on in the markets, I highly recommend people to visit crushthestreet.com/crash for some of the information. But without any further ado, let's get right into it. Eric, thanks for coming on the line with me today.
Oh, thanks for having me back, Kenneth. It's my pleasure.
Well, it's a very timely time to be discussing the markets and gold and what's going on. Since right about mid-November of 2018, we've seen a very decisive upward move in the price of gold and silver. So let's talk about that. What are we seeing? Why is this happening? And again, it seems like a decisive move, not just an uncertain move.
Well, I would agree with it that it certainly has had some conviction to it, although that's, in the context of a 2 to 3 month move. From a very broad stroke perspective, I still think we're in a multi-year corrective rally from that late 2015 low. And I think that before it's over, we'll be up above 1400, but that's kind of a 1 to 2 year outlook. But I think that a lot of what you've seen is, is the dollar finally beginning to show some, not even weakness, but a hesitation or a culmination to the strength that it had been showing for a good part of 2018.
Here, let's talk about this. We're seeing a lot of current news right now as it pertains to Trump, the government shutdown, hundreds of thousands of employees not receiving a paycheck right now. And, just my own personal thoughts on that. I kind of feel like, I don't like big government. I think government's inefficient. I don't like government programs. But individually, I feel bad for these people who are depending on a check. Individually, I feel bad for the people. And it's kind of an unfortunate situation. The optics are very uncertain for the markets. And I think the markets are looking for some sort of certainty here with the shutdown. And it seems like a battle of the wills now. I mean, because of how polarized the politicians have become, the Republicans, the Democrats, and, this disdain for President Trump, it just seems like an ego battle now with the wall. So talk about this government shutdown and how much of an influence do you believe it's having on stock markets and even gold for that matter?
Well, that final question, my answer to that is really sums up everything you've said there. And I really think that it does not have that much of an effect. I think it's more white noise in front of some of the things that are having a much bigger effect. And unless it really drags out and then does threaten to impact GDP, next quarter and perhaps other economic numbers in the coming months, unless that happens, I don't think it's going to have a big impact. And even if it had a minor impact, in the last week or two, you've had Powell come out and start to talk a little bit more dovish about interest rates for 2019. So that would already be kind of factored in there if you did see a little bit of slowdown because of it. But for all intents and purposes, I don't think right now it's having much of an impact. I think that you've got a couple key things that are much bigger, and sometimes they're not in the headlines as much, but are really what's impacting this. And one I just referenced there, which was interest rates. And you go back to December and then early early part of January, and you can see how the interest rate expectations and realizations really had an impact on the stock market in particular. And as the stock market has shown more signs of vulnerability, that's when gold has taken on a little bit more of the safe haven status. And if you look at when it had some of its nicer moves up, it was on the heels of sharp sell-offs in the market, which we've seen many times in the past. But the other thing that I think is really impacting it is the entire trade battles, and when you really look at how that impacts different things in the market, as that came more to the forefront in 2018, that's when you saw the dollar start to climb again, particularly against the yuan, which is often used as ammunition in the trade battles between China and the U.S. And a lot of other countries and currencies have just kind of been pulled along for the ride in that scenario. And so, as I said, you saw signs of really the dollar rallied into August. Since then, it has done a lot of wild swinging, a lot of volatility up near those highs, spiking to new highs on something like the dollar index on a couple occasions, but never following through. So it's been in this topping phase, and as that's happening, you slowly see more positive news come out about the trade negotiations and about potential resolution. And we're even coming into that this week, where on today and tomorrow, I believe it is, there's meetings between the representatives of the two countries, and Trump has already tweeted a couple times that things are looking positive, and so that's the type of stuff that I think has really had the impact on the stock market, on the dollar, and on gold as a result of that. And I think that's going to continue to be the case.
Eric, yes. So it's interesting because it's definitely seems like stocks are volatile right now and struggling. But even on Friday, we had some pretty decent jobs numbers which came out, and it seems like my readers, my listeners, we know all about the fake employment and the underreporting that's going on, and a lot of the massaging of the numbers. But you still have to acknowledge when positive or more than positive news is coming out, and you do have the situation where the job market is pretty strong, but yet we have a lot of volatility in the propaganda of the sentiment banner of the Dow Jones, the S&P 500. So could you speak to that a little bit? Maybe the dynamic of what maybe we're expecting. I think a lot of us are expecting to go into a recession, but we do have this strong underlying economy, at least for now. I mean, of course, let's throw in ultra low interest rates and the unsustainability of everything. But if you can try to understand what I'm trying to say here, any thoughts on this?
Well, I don't consider myself an economist, and so it's only very general perceptions that I have of that. But I think that one of the key things on when you reference Friday in particular, and I know that's just one monthly number, but having it timed along with the discussion from Powell on being more market sensitive and economic number sensitive when looking at future rate hikes, that had allowed a positive number like that to be perceived as positive for the market, whereas the last couple of months, the opposite had been more the case. When you have too strong a numbers, now all of a sudden it was getting that fear of rising interest rates and rising inflation. So that type of perception, it swings wildly from month to month, sometimes from week to week, depending on what particular fundamental or news item is really garnering the majority of traders' attention. And so I'm not from the markets that I watch and some of the expectations I have for the coming year or two. I'm seeing, particularly 2019, so certainly some slowdown of the frothy bullish news that we had the last year or two, and a lot of that was on expectations, many of which were realized, some of which were not. But I don't think that automatically throws you into a recession, and a lot of that also does swing on mindset and confidence numbers and whatnot. And if things start to bring about a resolution with the trade battles, even if the actual trade war kind of lingers on but is showing signs of progress along the way, that could certainly swing traders' perception of it. And so I don't, even what I'm anticipating in the bond market and in interest rates, I don't think that the fears of an imminent recession are that valid. More, like I said, of just a tapering off of some of the bullish sentiment we've had prior to now.
Eric, so let's talk about this. What is your cycle work telling us about what's going on over in the Far East? With I know they're accumulating heavily precious metals, and while they've done it, sub $1,300 is looking very timely, with gold now moving up, around 1290 right now. But I'll just bring up this news story. Elon Musk is now breaking ground in China with its Gigafactory, and expecting cars to come off the assembly line within a year. So, what's the implication of this, and is this a sign of the times?
Yeah, I think it's definitely a sign of the times. I don't know that I could talk real in depth or intelligently about all of the different aspects of that. But from a broad cycle basis, I still contend that we've seen this recurring 40-year cycle that, and again, that's very broad stroke. I don't use that to trade off of, but it helps mold some general expectations. And you go back and you look at the swings in particularly the currency wars that have gone on a recurring basis on a pretty precise 40-year cycle. And you go back 40 years ago and you look at the dollar and gold and silver as a result. And I'm not expecting anything as dramatic as the late 70s, but it just reinforces that cycle. You go back 40 years prior to that, and again, you had a big battle. Now, that time it was suspension and outlawing of gold and silver. But if you look at the value of gold once the private ownership of it was banned, overnight the value of it increased 50-60%. You just have this recurring battle where paper currency versus hard currency. And now in this phase of that 40-year cycle, you've got a new entry with the digital currency whole arena. And I think that is opening up a whole new dynamic, and might be something that at times gold has to battle with and gold has to contend with. Because when you look at something like gold, you really have to kind of break down its value and its pricing based on a couple of components. One is, for lack of a better term, its intrinsic value, although even that's debatable whether that's an accurate term for it, but a value that most people generally assign to it. And then you've got that speculative value. And that speculative portion is the one that swings so wildly. And you can even take that example and apply it also to something like cryptos and Bitcoin a couple of years ago, that you have a certain value that was being assigned to it, and it was rising at certainly a strong but very steady basis. And then in late 2016, early 2017, started to angle a little bit higher, and that's just when the dollar, through all of 2017, had its sharp sell-off, and that was when all of a sudden the speculative fervor in cryptos just took off. And when did that all kind of reach the peak of its bubble and burst? Right as the dollar was starting to show a floor under it and starting to settle down at the very end of 2017, beginning of 2018. And at the same time, you had gold battling for its share of the anti-dollar safe haven status. And I think you're going to continue to have kind of that trio of that three-pronged battle, instead of just paper versus metals. Now you've got the digital cryptocurrency battling for that speculative portion of its value. And I think you're going to continue to see that out in 2019 and 2020. So there are going to be times when gold really benefits. There are going to be times when you see the cryptos do it, and times when the dollar, the paper currencies are there's more faith in them. But I do think we're in for more of the larger swings in 2019, which provides some great trading opportunities on both sides of the market. I had even done back in early December, done a little report called Currency Wars and Cryptos, and I'd be happy to send your listeners a free copy of that if they contact us. But just kind of dealing with that whole that dynamic, that battle between the fiat versus the hard and metal currency versus the digital and cryptocurrency, that battle that I think is going to persist in the coming years.
Eric, so let's talk a little bit about, a decisive move, what that could mean maybe for stocks, and actually what that could mean for precious metals. Because, honestly, 1290 gold is not that exciting, considering, we were here and beyond this in 2016. We had a 1350 or whatever it had gone up to in 2016. So we've seen this before, and we've also been burned by it, because we came off that 2015 low in December for it to, react very positively in 2016, only to slowly disappoint once again. So what does a decisive move in gold look like? And what could be a scenario that plays out? Nothing, no predictions, but just, what does a decisive move look like to you?
Well, I think that, again, if you're considering it a corrective rally on a multi-year basis, I mean, that can still represent some nice up moves. But if you look at the whole decline from 2011 into 2015, and from there, if you're talking about a corrective rally, it's something that does take some time, does have a lot of backing and filling, just like we've seen in gold since the December 2015 low. But there are some specific support levels within there, some specific patterns and wave structure that I expect to see that either reaffirm or negate that scenario. And one of them was that, when gold saw that initial surge into the third quarter of 2016, then pulled back into late 2016, that kind of set a very critical range that gold should not drop below, and it has not, and should ultimately exceed but it doesn't dictate the timing for that breakout to the upside. So again, the action since even late 2016 has been very indicative of a corrective rally, that you don't get an uptrend that takes off and continues to build momentum for 9, 12 months or a year or two. Instead, you get these 2 to 3 month surges, and after them, you see a prolonged period of pulling back, of correcting. But as long as those corrections don't violate the preceding lows, it's also what's kind of discussed as a basing period. It's this slow, gradual turning of the tide, kind of like reversing course on an aircraft carrier. It doesn't happen all at once. And there's even some counter momentum, even once the throttle has been reversed. And so then it has to slowly build up the new momentum, or momentum to the upside, with a lot of corrective action in there. And it's once you start to see some rallies with each ensuing pullback being a little less damaging than the one before, that's when you start to get into that phase where you're more primed for an accelerated move to the upside. And a perfect example, see, I'm talking about that on a 1 to 2 year basis, but on a fractal basis, something a little bit smaller than that gives a representation of what it's going to be on a larger scale. If you look at the action since August in gold, it was a very good representation of what I think we're going to see on a 1 to 2 year basis too. And you saw that initial low in August on a weekly basis, which would be kind of comparable to the multi-year low in December of 2015 on a monthly basis. Then you saw an initial rally and then a pretty decent pullback into late September, kind of like we saw an initial rally in 2016 and a pullback into late 2016. So again, I'm comparing what's unfolded recently on the weekly trend to what is currently unfolding on a monthly basis. From the late September low, you saw another rally and another sharp pullback. But then from that low in November, which bottomed along with some long-term cycles in silver, that was really the key for me, is to get that divergent low in November where silver spiked to new lows and gold made its second or third ascending low. That type of divergence is often what you see at an important turning point. So then gold had another rally and a lesser pullback, another rally and a lesser pullback. And that was when all of my publications in late November were discussing new buy signals in gold and silver, and why I thought we would see a more accelerated rally into late December, early January, and ultimately into late January, early February. But it's that pattern that I'm trying to illustrate here, where you start to see the momentum build and a more favorable wave structure, for lack of a better term, start to unfold in the market. And that's what happened on a weekly basis in gold. And then we did see that more accelerated up move in December and carrying over into the early days of January. If you take that scenario from August through January on a weekly basis and now extrapolate it out to a monthly pattern and kind of overlay it on what we've seen since December of 2015 on a monthly basis, that's the type of thing that I am talking about. And so even your first decline, now I'm referencing the monthly basis, and I hope I'm not completely losing your listeners here, but that first decline from July through December 2016 was the sharpest. Then gold this past year saw the decline from April through August of 2018. That wasn't as sharp as the one we saw back in 2016. So now if we carry this advance, hopefully up into late January, early February, although I think we're going to see an intervening pullback before that. But if you carry that out, and then gold sees another decline, another pullback that's not as damaging as the April through August 2018 one, now you've got this series of rallies with progressively lesser sell-offs following each one. That's when you start to build the base and build the case for a more defined a rally with greater conviction like you're talking about. So that's the type of scenario I'm looking for, and I think that still pushes you out later into this year and potentially into 2020. I had done some other reports back in August and September talking about longer term cycles in the gold mining shares and why I thought that they would bottom in third quarter of 2018 and not top until late 2020, early 2021. So there's this a bit longer term cycle starting to turn positive for a lot of the metals markets. But I don't think you're going to see an accelerated advance all at once. In fact, most of the time in precious metals, the most accelerated, the most parabolic move comes at the very end of a cycle. So yes, a lot of traders are getting frustrated when they're getting in too early, but you need to be watching the signs and being prepared to really jump on when that final bullish signal is triggered.
All right, Eric. Well, we'll definitely be in contact with you very soon. I'm interested in seeing how this all plays out here in 2019, and especially if we get some further confirmations in price action here. So if people want to learn more about what you do and the research that you're working on, let us know where they can go and what they can expect to find.
Well, like you said at the beginning, you can go to our website. We actually are transitioning to InsideTrackTrading.com, although both sites are valid and they're both ours. There's no nothing nefarious going on there. The fact that we are just for SEO purposes and a lot of other reasons decided to shift to InsideTrackTrading.com. So that's the best place to go. And as you mentioned, there's the extra I in the middle, INSIIDE, tracktrading.com. But there's also a lot of, and you could contact us through that, get some free samples, also get a couple of these reports that I mentioned that we'd be glad to send out free copies of. But you can also read a lot of archived reports and analysis on 40yearcycle.com. It's the number 40 and then the words yearcycle.com, dealing with the 40-year cycle of currency wars, of geopolitical. There's even some very uncanny Middle East cycles that are coming to fruition in 2019 through 2021, which that too could have its impact on things like precious metals.
All right, Eric, and everyone, if you enjoyed that interview, please give us a like, share the interview, and hey, if you didn't, if you got something out of this, we're in a transition point. And this is what I'm feeling right now. I feel like this start of the year, we've seen a real pivot in certain things in the markets as it pertains to, possibly in a recession, stock market correction, and some upward moves in precious metals. So I'm really excited about that. Eric, thanks for coming on Crush the Street with me today.
Thanks for having me back, Kenneth.